Welcome back to the next big story from Uber. We are going to the story of the rate cut. The Reserve Bank of India has given the common man today a reason to smile. EMIs and loans are set to dip after the central bank slashed the repo rate today by 1/4 percentage point. While corporate leaders cheered the move, the rate cut gave way to a plunge on Dalal Street. What's significant, however, is RBI Governor Raghuram Rajan's coded message to Finance Minister Arun Jaitley. Prepare for a bad monsoon or bear the brunt of 6% inflation.
The RBI has given you reason to cheer. Your loans are about to get cheaper after the central bank cut down the rate at which it lends to banks.
We feel a more appropriate stance is to front-load a rate cut today and then wait for data that clarify uncertainty. Meanwhile, banks should pass through the sequence of rate cuts into lending rates.
The RBI's slashing of rates was in line with the expectations of India Inc. A 25 basis point announcement during the monetary policy review was just what the industry wanted to hear. With a single stroke, Raghuram Rajan managed to walk the tightrope of keeping investors as well as the government happy.
These cuts are consistent with trends in the economy, including strongly declining inflation, contained current account deficits, and ongoing strong fiscal discipline.
And soon enough, the country's largest lender, State Bank of India, passed on the cut to consumers, trimming lending rates to 9.7%. But the marginal rate cut failed to impress Dalal Street, with benchmark indices Sensex and the Nifty sinking deep into the red. Rajan had a word of caution and a reality check for Modinomics. The RBI governor cut the GDP growth forecast, also projecting inflation at 6% by January 2016.
Volatility in the external environment could impact inflation. Therefore, a conservative strategy would be to wait, especially for more certainty on both the monsoon outturn as well as the effects of government responses if the monsoon turns out to be weak.
With industrial production and corporate profits taking a hit, will the RBI step revive economic growth and boost consumer sentiment? Bureau Report, India Today.
Joining me now is Sajid Chinoy of JP Morgan joins me. Appreciate your joining us, Mr. Chinoy. I just want to get a sense from you, from what you heard from Raghuram Rajan today. He doesn't seem to share the optimism of the government, doesn't seem to share Mr. Jaitley's optimism that the economy is completely stabilized. He is still warning of a possible geopolitical situation affecting oil prices. He's warning of a deficient monsoon. Should we be concerned at this moment, given what Mr. Rajan has said today while putting that rate cut in place?
You know, I think the Governor Rajan's got good reason to be concerned. And let's not take away from the fact that India has come a very long way from 2 years ago. A lot of macroeconomic buffers are in place today so that if the Fed begins to move, India's far more insulated. But there are very clear risks on the horizon. I don't think anybody believes that growth is anywhere near 7.5%. I think the CSO has done a good job, but the fact is all the signs on the ground point to much weaker growth. We've had a terrible quarter of earnings. The fact is the rural economy is struggling at the moment, and if you do have a drought-like situation, that could exacerbate the rural economy. And there is a very clear risk to food inflation spiking if the monsoon is not normal. So I think the governor has been prudent in outlining the risks. The fact is the RBI has done what it could. It's cut rates by 75 basis points over the last 5 months. I think the ball now goes squarely back into the government's court, A, to both manage a drought-like situation, and B, after we get through that, to continue hard with the process of supply-side reform.
But what in your view, is the biggest danger at the moment? What is that coded signal that the Reserve Bank of India governor has been giving today, which the government should really be wary of?
I think there are two dangers, Rajdeep. One is a near-term issue, which is if you do have a drought-like situation and if you have a lot of stress in the rural economy, there'll be a lot of pressure on the government to be populist. to raise agricultural support prices by 8 or 10%, to open up the fiscal purse strings, that would be dangerous, because then you give up all the hard-earned macro stability gains. I think that's the first issue. The second is a more medium-term issue, that for investment to actually pick up, for growth to pick up, we have to solve the problem in our banking system. There are very high levels of debt among infrastructure companies, among public sector banks, and if we don't chip away at that problem, these rate cuts won't amount to too much in terms of higher growth. So I think those are the two areas that I think the RBI would like the government to be very aware of.
But at the same time, do you believe that that there is a sense then that we should, that this whole philosophy of Achhe Din and the fact that the economy is, the worst is over, we will have to wait till the monsoon, for a good monsoon before we can be confident, particularly when it comes to agriculture, that we are, that there aren't these sort of danger signals there. So should we be waiting till September, October before we know that the worst is over?
I think we'll have to wait. I think, let's give the government its due. A number of very important reforms have happened over the last year, whether it's the coal bill, it's regulatory in mining, it's insurance, it's creating bank accounts. But all of these things typically take a very long time to translate into higher growth and higher activity. So we'll have to be patient. I think we'll have to wait to see how the monsoon pans out and how the government responds. To be fair, they did a very good job last year. We had the same situation last year. The monsoon was 88% of normal, which is what the Met says it will be this year, and food inflation actually fell because the government responded very quickly. So the hope is they do that again, and then once that passes, the real hope among observers is important reforms like land acquisition and the goods and services tax actually get pushed through. Those are the things that will move the needle for growth in the coming quarters.
Sajid Chinoy, Chief Economist with JP Morgan, appreciate your joining us on a day when the RBI has cut the rate but also sent out a warning to near-term economy. Appreciate